Hello, hello. Good afternoon. Good afternoon, everyone. So today I'm gonna be with a friend of mine. He's also in tax business. So Alex, just waiting for him to join. Let me just text him. Sorry, guys. We are going to talk to you about common mistakes we've seen and we've seen where this tax season. Just finished the tax season, and we've seen a lot of mistakes. And we are ready to talk to you to say. I have the. I notice I always like fixing my hair when I go live, but okay, I gotta stop this, I guess. Anyway. So we are ready to tell you about a lot of mistakes we've seen during tax season, just so you guys can learn from it and actually avoid it. We don't want you to do the same mistakes like a lot of people have been doing, and mostly, like most of the time, like a lot of mistakes actually happen when we talk to each other as tax professionals. We see a lot of people doing the exact same thing. So that's why we like to do lives, do videos, do these posts. Here we go. Hello, Alex. Like, can you ask to join? Oh, here we go. I see you. We're doing this for the first time, guys. So. Well, I said yes. Oh, here we go.
Okay, I'm here.
Hey, Alex. How
Hello.
are you? Hey, how are you
I am
doing?
doing great.
Awesome. So we successfully were able to do it. Like, this was the first time I think I'm doing it from the end.
Right. Yep.
Yeah. So how are you today?
I'm doing good.
Do you want to
Doing
introduce
taxes.
yourself?
Doesn't
Yeah, I was just
stop.
telling them that we're gonna talk about the mistakes that we've seen. Like most of the time, like when one of us like discover some people doing some mistakes, it end up like when we talk to each other, like, oh, okay, I've seen this too. So it will be really great to talk to people and tell them about it. So do you want to first introduce yourself so they can know my people in my end know who you are, and then also I'll introduce myself for the people on your end to know who I am.
Right. Yeah, so I am Alex. Alex does taxes. That's my Instagram name if you want to go and find me and follow me. But I've been in the tax business for 15 years. I've actually owned a tax franchise close to 10 years. It's the franchise that has the little Statue of Liberty they wave. I don't want to say any names. I owned one of those for 10 years, and now I've been independent ever since. So I'm in the tax business. I do work with, my niche is working with business owners, where I am working with them as far as helping them build their business, helping them, retain some capital, start their business, and most importantly, helping them trying to save money and understanding how the IRS tax code works.
Awesome. And where are you based?
I'm based out of Chino Hills, California. So
Awesome.
Southern California right now, it's nice and sunny out here.
Oh,
Yeah.
wow.
I got the office view, yeah.
Nice. And yeah, congratulations on the great
Thank you.
office
Yep.
that you have. All right. My name is Noura Al-Masri. I am an enrolled agent and the founder of Noura's Books. I'm known as the nonprofit CFO. I do some other nonprofit. I have 50-50 of my clients. I do taxes. I have a coaching program for nonprofits to help them scale to 6 and 7 figures nonprofit. And I also do taxes, bookkeeping, CFO, anything like you can think of, tax and accounting. So me and Alex have been working together like in multiple projects, and we wanted to come here together to talk to you about our mistakes so you can avoid them.
Right. Yep. And make a ton of them, that's for sure. And we learn. Right.
Yeah. So what mistakes have you seen this year, like people have been doing?
So the biggest mistakes that I see for people is just not being prepared, right?
Mm-hmm.
they all know that they have to get stuff done. The clock is ticking, and they want to go and reach out to me last minute, right? And when you've been doing taxes as long as you and I have, the biggest mistake is to contact one of us and then not be prepared on top of it.
Yeah.
Like that's mistake number one, right? Because people like you and I, our time is important, right? And if you want to come and get our time, you got to be prepared. And that's mistake number one, right?
Yeah.
That's a big one. And, you know, making sure that, you know, you are well prepared, especially if you have an extensive tax return and if you own a business, you have rental properties, employees, things of that nature, you know, you definitely have to be prepared.
So, like, I'm sure, like, some of people were gonna ask, like, how do we prepare? We brought all the thing that saying tax documents. We bring them into you. How else can we prepare? So, can you elaborate that?
You know what? The best and easiest way is just to have a bookkeeper. If you have a business, you need a bookkeeper. And not only that, if you're just starting, which I deal with a lot of startups, so a lot of the startups, you know, I'll mentor them a little bit and teach them like how to maintain and keep their books. But most importantly, if you're bringing in revenue, 50, 60, 80, $100,000, you should have a bookkeeper, because the bookkeeper is going to be on top of things month in, month out. You're going to get your P&L reports. So by the time you come see me, January, February, you should be done. Like you should be done, and you should already know more or less of how much taxes you may have to pay at, you know, during tax time. That's the biggest thing. And I feel like for most people too, like they don't like or want to like invest in a bookkeeper, but it is so important because you'll miss expenses. You're not going to remember that you expensed a meal last February. You're not going to remember, hey, I bought some software in August. You're not going to remember, hey, I just bought a desk. You're not going to remember any of that stuff. So when it comes tax time, they rush. They just try to itemize a bunch of stuff, and then here you go, work your magic, and it doesn't work that way. So a bookkeeper alleviates a lot of that.
Yeah, definitely. Like you can, like you said, I cannot remember anything. Like sometimes last week, where did I go last week? How can you remember actually
Right.
what was this money for? Especially sometimes, you know, a lot of transactions going on, like they don't realize that how much in deduction they could lose. And also, like you said, we're busy, and to do a cleanup is not going to be very pleasant. So
It's not going to be pleasant, and it's definitely not going to be cheap. That's for sure. Because, you know, once again, it's our time, right?
Yes.
You know, I think for me too, another thing that I run into a lot is the high W-2 income earners going exempt.
Yeah.
It's a big deal, right? I've seen that more and more now. You know, inflation's going up, and I understand, you know, families, they're trying to keep every cent that they can have out of their paycheck, right? So what they'll decide to do, making high six figures, is go exempt, right? And they know, like, hey, if I go exempt, you know, I might own just, you know, like my own personal property. Hopefully I have enough, you know, itemized deductions to bring down the liability. And you and I both know in most cases that's not going to happen, because our exemptions are a lot higher now, right? The standardized deductions are raising it every single year. So a lot of times that's higher than what you would normally get, you know, with your principal and interest and all that stuff. So I see huge tax bills just because they decide to go exempt. Like, you should like call your tax person and all that, but like, hey, do you think this is a good idea if I go exempt? And, you know, there are those people that get those bonus checks and stuff like that. And I understand, you know, you're going to get taxed over 40%, but still, one way or another, you and I both know the IRS is going to get their money.
And a good solution of that, actually, I see, like, do tax planning, talk to your tax professional, do something. Just so you're not surprised, like you said, because I've seen people having like 20, 30 K tax bills just because of that reason.
Big, and I've seen a lot of that this year. That's for sure. I think for me personally, another thing like I started to see a lot this tax season was a lot of people that I'm getting new clients, especially doing a lot of social media marketing. Their biggest reason, and I'll ask them like, why are you switching? Why are you looking for someone new? And it was always the same thing. My tax person doesn't answer the phone, and they're not very innovative in you know, wanting to give me information on how I can save money.
Mm-hmm.
So I'm starting to find more people, especially as we're trying to make more money. They want the tax tips. They want to understand how taxes work. They want to know financial planning. They want to know, you know, they just want to make sure they're not paying too much, right?
Mm-hmm.
They got used to COVID, I think, and they're like, just, hey, let me just turn in my stuff. Here's my stuff. See you later. But I think more and more people, they want to feel more comfortable with their tax person, that they're getting told all the proper information to help their situation out. And I think people, they're looking for more of that. So I've kind of changed the way my business is going based off of learning that, you know, from people.
Yeah, that's amazing. And that's what we do, all these lives and like videos, tips, and social media to educate them. So yeah, so I've seen on my end actually, and I've spoke to also other people, it's a lot of people coming thinking they're gonna do Schedule C because they have an LLC. It turns out they they do not have a Schedule C. They actually have a partnership, and they do not realize
Do I have
that.
a 1065? Yeah. Yeah.
This is mostly happens in like a husband and wife, because we're registering an LLC, or when you have a partner. So whenever you have a partner, it is by default a partnership, and it's a big deal because you're gonna get penalized.
For sure.
Because 1065 for the partnership due in March 15, not in April 15, and it's a whole different return than what you're gonna do on actually Schedule C, which goes with your personal return.
Right.
And you're gonna get it's a lot of difference, two different separate return. You avoid penalty when you do it. I had some people telling me, but I'm an LLC, I don't want to do 1065. No, you are a partnership. I still don't want to do.
They don't know why.
1065 because they don't for an extra return. But okay, hello.
Right.
It's not up to you, it's the regulation. So you have to avoid their regulation. You cannot just say, I do not want to file this.
You have to. Yeah. Yeah. So like for, especially like starting up a new entity, I feel like, especially this tax season, a lot of people are on the social media, on the TikTok. Hey, go start an LLC. Hey, go open up a corporation, and you know they'll go and they'll open up the corporation. You can open up anywhere online now. The problem is they don't get all the right information. Just like what you said. What's better for me? Is it an INC? Is it an LLC? Should I just be, you know, still filing a Schedule C on my tax return? Most people don't even know what a Schedule C is, right? It's a form that you fill out on your 1040 for your business. And this tax season, I've been getting calls from people, other people that are not my clients, saying that they just were recently audited, right? And I probably had 3 different people in the past 6 weeks, and they all had one thing in common. What do you think that was?
Auditing.
All Schedule C's, right? Why?
Yeah.
Because it's the easiest way to commingle your business and your personal income. It's the easiest to put whatever you want on your tax return. So it's easier for the IRS to target those type of tax returns. So not only did they get audited for 2022, because, you know, now this administration just gave the IRS a bunch of money. Not only did they get audited for 2022, they went back to 2021, 2020. Some even went back 7 years. So if anybody is out there listening and you want to go open up a corporation, you need to speak to someone like me or Nora to get the details, because there's a lot of criteria that goes with opening up a corporation. It's just not as easy as just, you know, paying a fee, getting some paperwork. There's a lot of things that go into opening up a corporation. That's for sure.
Yeah, and I've seen a lot of people like they just want to start an S corp because all of these like vibes about S corp, you save money. S corp, you save money, and they S corp is not really a registration. It's just like an election. You can be a C corp, you start a corporation, or an LLC, and then you elect to be an S corp. And there's a lot of rules for that. It's not like just you. Are you ready? Are you ready to do an S corp? Are you able to be an S corp? So many of these, because of the information coming from non-tax professionals.
TikTok, a lot of Instagram, right? Yeah. You know, for anybody out there, like for me, when I'm sitting consulting with a client, you know, I like to see $50,000, $60,000, $70,000 of profit or some generation that comes in, because you're basically telling the IRS that you want to be an S corporation, you're basically telling them that how you want to be taxed, right? And once you start bringing in the money and start, bringing in the income, and if you can afford it, then you can start thinking about switching with the S corporation, because you have to deal with payroll. You have to pay yourself a salary that's required by the IRS. You have maintenance fees. You have fees with the state of I'm in California, so for us, no matter what, it's always going to be $800 if you make $1 or not. You have to have a registered agent to manage your corporation, right? And then there are some rules with California. You have to, statement of information you need to complete. You have to, be reporting your meetings and minutes and have that managed. So there's a lot of things that go into when you start making that switch. And I don't think a lot of people get enough information doing that. And that's a big deal. It's a huge deal. And if you don't have a good tax person to say, hey, it's time for you to start thinking to switch to an S corporation, and then they don't do it, I mean, the tax rate on a Schedule C or 1040, it's expensive, especially if you're qualifying for a property. It's expensive. So I see that also.
And a lot of people do not realize they have to put themselves in salary, because it's not actually up to you. It's not a withdrawal anymore. They cannot get a penny from your S corp unless you're paying yourself a salary, because IRS wants that payroll taxes. So you really,
and the state does too. Right. And the way I justify a salary, it's obviously how many hats that you're wearing. So for an example, if you're a real estate agent, you're bringing in 6 figures of revenue or whatever. I'm probably going to tell you probably want about 25% of that should be W-2. Right. I deal more or less with like real estate agents and investors. And out here in California, the market's always hot. So you have people making money, but they fail to understand and want to do the payroll services with it. And to me, like, that's the number one thing of how to get flagged to be audited, is not setting up your payroll.
Yeah, definitely. And like you said, IRS now, like they're targeting Schedule C. They're also targeting 990. They're targeting nonprofit, because those are the easiest to target, and they know they're gonna win. They're not targeting Apple or Microsoft. Like these people do not. Most likely they missed something. They are doing something wrong, so they can get a lot of money from them. A lot of nonprofits also getting actually a lot of penalties. They're getting their status revoked. They're actually getting audited as a nonprofit owner just because they did not file a complete 990. They think use those volunteers, thinking that they are actually gonna help them. And we did it for free. Okay, is it complete?
Right.
Then 2 years, 3 years down the road, they are receiving these bills like with thousands of dollars of penalties, and they are actually maybe being revoked or audited. So one of these, none of them is really great. So like the small business or nonprofit they have to worry more.
So out here in Southern California, there's a lot of nonprofits, especially like me. I'm in the community of sports, travel sports, and there's a lot of nonprofit. And just for people, so they know, like, if your kid in part of an organization and they're a nonprofit, you can actually go and look up their tax return. It's like it's public record. So I'm going to ask you this question, because that's your niche, is dealing with nonprofits. And I have some that I deal with, and you help me out with them a lot. But what is the biggest thing for nonprofits? Why they get in trouble?
Because they don't want to pay. They think they are nonprofits and they shouldn't pay. Everything should come to them for free. Actually, in fact, nonprofits are required to spend more to be in compliance. Because basically they're telling the government, okay, government, you don't have to worry about this sector or this specific thing. We're going to take care of that. And the government tell them, okay, you can do that. So we're going to give people tax exemption, tax break. So when they donate to you, we're going to lower their tax bill. So now the government's eyes, the IRS eyes on them wide open. There's a lot of requirements, a lot of things to be in compliance. Bookkeeping, not only for nonprofit, for everyone, like,
But
you know, like
bookkeeping for nonprofit though is essential.
yeah,
You have to have.
it's a compliance work. People do not realize it is a compliance work. It's not a luxury. I have someone, a new client actually. They came and their books. They said they have bookkeeping, and apparently the person who's doing bookkeeping does not nothing. No, I don't think it's an accountant. I don't. I think they're just putting numbers, and they have weird stuff. And like, this is not a balance sheet. This number shouldn't be. This is this is not a field in a balance sheet. What are you talking about? I couldn't until now. We had to file an extension. I couldn't do their 990s because they don't want to hire me to do their bookkeeping, and they keep going to the same person. And like every time they turn it on, it's a disaster more than ever.
Right.
So like, how I cannot put my name on that? You guys have to fix it. Either hire a good person who knows bookkeeping, who knows how to do this. So they think they have to get volunteers. They often, I see them like, so anyone can volunteer to do so and so, even low, you know, for law office or an accounting things, like things that only professionals can do. And they offer, they said like, I can give you a tax receipt. Well, I mean, I have to message a lot of people. No, services are not, it's not deductible. You cannot donate your service. The most they can say is thank you. You have to manage your nonprofits like a good business, not any business, a good business. You are required to be in a compliance bookkeeping, very good tax return. You cannot paper file anymore.
No, you cannot. I saw that.
Yeah.
Yeah, I think for those, especially those 990s, you're under the microscope more with the IRS than like any other businesses. Reason why I think is because, especially if you file for the exempt status, they're looking out for those unrelated business expenses. So whatever your mission statement is that you're receiving those funds for, anything outside that mission statement, I think this is where people mess up. Anything outside that mission statement is called an unrelated business expense, and that's where you pay taxes on. Right.
Yeah.
I think these people that open them up, which is a mistake, is they don't know the difference between the nonprofit and then having the nonprofit exemption. You have to apply for that, and it's not cheap to be exempt from paying taxes. So I think people make that big mistake and not understanding the both. Like they don't, and it's a big deal.
Yeah, and they don't recognize they have to actually go to the state level as well. After you are approved on the federal level, you have to see what's required in your state. That's after you register and get everything from both sides, still like another step. So many steps. Like I explained the other day for people, okay, when you want to go and register any type of business, you go to the state, register, and then go to the federal, and the IRS get the EIN and say, oh, hey, okay, this is our tax ID, and you're done, right? Maybe like some operation agreement or any other things based on the information. But when you want to do a nonprofit, it's a circle. So you start with the states, register, get the EIN, go up, actually do the bylaw and conflict of interest, because you're going to use these and actually applying for tax exemption. And then you go do the application, you get approved, go to the state level and see how can you be approved on the state level. And then
it's a process.
You will so you close the circle, and then after that you'll see how are you going to get the things. And you have a lot of requirements to get approved for grant, to get people to donate to you. People do not realize in nonprofit, like if you have to have everything is public. So like you said, Alex, like you can go and look for 990 for any organization. Before you go ahead and donate, you want to verify that. And people, so that's why it has to be more professional than ever.
Than any other entity, because than any other entity, because the 990s, the nonprofits are public. Like you can see what people are on their tax return. They legally have to put the salaries of whoever's really operating the organization, even the help. It has to be all public record. So, and there are times with some nonprofits where you can donate a check. Let's say I go and donate a check, and you're not a compliant, they're not able to even cash that check. That's how much compliant that you have to be.
Oh yes, yes, and actually, I've seen a lot of people they lost major donors, and this is what you typically lose. Like people who are educated enough, like they're gonna go and see. You cannot accept donations anymore because they don't take your donation. They don't donate to you. They will see an alternative actually because you're not gonna give them the exempt
Hmm.
status, the benefit of tax deduction anymore. So they're not going to donate to you. I've seen a lot of people come just like they didn't know they were revoked. They received those. Um, sorry, I got a phone call. Distracted me. So they saw actually this is they say like the donor will come to them and say, okay, we cannot donate to you anymore. They promised them this big donations, and well, you're not tax exempt. Your status has been revoked. And they come to me, we didn't know our status has been revoked. Maybe you moved and you didn't receive the letter. You may receive the letter, but you didn't open it.
Right, right,
But
right.
it's public record. You go to the irs.gov, and when they pull
Well,
their organization, they will see
that's
everything.
scary.
Mhm.
That's scary. You don't want that.
Yes.
But yeah, common mistake for people out there, if you guys want to start a nonprofit, and there's some really good people out there doing some nonprofits, and all you good people out there doing your nonprofits, I suggest don't make the mistake and do it yourself. Consult with somebody so you can get a good understanding how it works, when taxes are due. I mean, even just the penalties of filing your tax returns late are crazy. Like you're paying per day every time you're late with these
Mm-hmm.
type of entities. So yeah, don't make that mistake. Contact with somebody that's definitely a professional and knows what they're doing with the nonprofits. That's for sure. That's
Yep.
for
Yep.
sure. You know,
Awesome.
it, yeah,
Yep.
and that's like, like the common mistakes. I'll go back to like the LLCs and the C
Mm-hmm.
corps and all that stuff. I think for me too, that the common mistakes that I see when somebody is starting up an LLC, especially if they do it on their own, because I try to get in front of as much people as I can, is the first thing like that I look for is the name of the corporation. Me
Mm-hmm.
personally, I'm very big on the name of the corporation. I like names that are vague, where you really don't know the type of entity it is if you're like looking at it. And for me, the reasons are for credit reasons, right?
Mm-hmm.
Um, there are names that the banks just don't like. They could be biased towards a lot of names. Like I'll give you one that's very simple: real estate. They don't like real estate agents, right? They just don't anything with rentals, stuff like that. Um, Anytime you open up an entity, just we want to make sure you want to get the right name. I've had even people use their own personal name as the corporation name. I don't like that, right?
Uh-huh.
Especially it doesn't look right on the application. Can you just imagine like, hey, Alex Arianas and then Alex Arianas LLC? Like it just doesn't look right. The other thing that I see as like some mistakes is the address. I personally believe that you should be doing business at a business and then have your home address, right? A
Mm-hmm.
lot of my clients, I'll give them the option and I'll let them know the reasonings why you should have two addresses. So imagine this, if you're applying for credit, right? Like these lenders have Google too. So they could just Google the address. And if you're trying to, say that you're bringing in a couple $100,000 of revenue out of your house, I don't know, you might have a little bit of a harder time getting approved some more funding versus if you actually had a business storefront. And I'll let people know like you can apply for virtual business addresses and stuff like that, where you can have multiple addresses. I do believe that you should have your business phone line and a
Mm-hmm.
cell phone. So when I go in and I apply for anything, as far as what the corporation is concerned, I like to have two things: business number and then a cell phone number.
Mm-hmm.
Um, yeah, I think that's really important too. And then you definitely want to have a .com for your business. You don't want Gmail. You don't want Yahoo.
Oh yeah.
Yeah, I mean, because I mean, just
And that's
just
another
look at it. Yeah, just look at it like, if I'm gonna buy services from you and your email still says at yahoo.com, I'm not gonna take you seriously, right?
mm-hmm.
If your business address is your home address as a client, I don't know if I'll take you that much seriously depending on what the services is for. So I think, you know, a lot of those common mistakes could be avoided when you go and actually talk to somebody that actually knows, you know, knows what they're doing. Another thing too is honestly just understanding how these entities and how they work. So that's my perspective as far as common mistakes with just opening up the corporation.
And in California, actually, I've seen this a lot. I mean, we spoke about it the other day, like you explained it to me a little bit, like the sole proprietor. Do you think people should do that?
So it just depends. I'm not a fan of a sole proprietor. As I said before, you know, you're more likely to get, those are the easiest ones to audit, like I said. But I believe that if you're an intent to make a dollar, you're going to do some business, you definitely want to have an entity, at least a single member LLC, to separate yourself from, you know, your personal tax return. Because like I said, a Schedule C is a form that you fill out for your business on your personal tax return. I like to do 2 tax returns to separate you from your personal tax return. You know, and then obviously for, you know, the tax reasons, right? You're going to have your tax rate plus 15.3%. Right? So, you know, definitely sole proprietorship is the easiest to get audited for sure, especially if you have dependents.
Yep. Yeah, because you're getting all these credits. They want to make sure that you really deserve those credits.
For sure, yeah. And like I said, I tell my clients this all the time. This administration gave the IRS $80 billion. I think they just took $10 billion back with this last negotiation. But the IRS is armed up with money, right? They're already hiring, it's not to scare everybody, but you should be scared, but they're already hiring a lot of inside people. I even have friends now that are working with the IRS. It's actually easier to actually get a job with the IRS, especially if you were an ex-government employee. You can get hired with the IRS, and the IRS will let you work from home. So more incentives to hire people, and now they're even hiring foot soldiers. So we're going to see that more. So to make sure that your butt is covered, you know, just talk to someone that knows the rules and help protect you the best they can, because they have the money and they're getting the resources now for like at least the next 10 years. So yeah, and yeah, you want to stay away from the sole proprietorship. That's for sure.
You don't want actually to have tens of thousands of dollars of a tax bill. I've seen people like that. Because also one thing I've seen, actually, people get a loan. They're getting a loan and that loan recorded in their books as an income. Now they're being taxes on that.
Yeah.
And
yep.
And they don't listen to fix it.
A loan is not considered income. You can go to court. A loan is not considered income. You can only write off the interest. It's not income. Don't screw yourself over, especially you people out there getting them hard money loans. Like, yeah, a loan is not considered income.
Yeah. So, like, don't pay an extra unnecessary bill just because you don't have the proper bookkeeping.
Well, not even the proper bookkeeping, but just your tax person, whoever you're going to, you know, and you know, if anyone's out here watching, like the next tax person you go to, you guys should start asking more questions. You should go back and doing some more face-to-face. I think everyone got used to COVID and just emailing and stuff like that. And I invested into a very nice office because I want to start seeing my clients again, because if you're meeting face-to-face, you know, you can ask these important questions so you don't miss out on deductions. Like a lot of these tax preparers and stuff like that, they're very lazy. So they just want their little $250, $300 and then see you later. Me, I like, you know, I charge a lot more, but I give my clients a lot more value, right? They know their stuff's getting done right, and they know that I'm going to help them save as much money as they can in regards to their taxes, especially if they're self-employed or if they own an entity, for sure.
Yeah, definitely. I mean, there is a lot going with taxes after doing the taxes. And like you said, actually, I like to meet with people on Zoom. So I work with people around the country, but we meet on Zoom. I don't like phone calls unless they prefer to. Okay, I do it, but I don't like it. I like to do Zoom. They explain to people exactly what they're expecting, and then I ask a lot of questions, and also I might take longer for me because they used to get taxes done with just like few documents, and no one's asking them, do you have that? Do you have this? Then they will end up like paying a lot of thousands of dollars more
For
that they
sure.
don't, just
Yeah.
because they just didn't provide the correct document or every single document, and no one asked them that, do you have this document
Right.
or not?
Right.
So yeah,
Yeah.
you know, you get what you
You
for.
get what you pay for.
And
Like your tax person not should be only asking what you just said, but they should be asking you things in the future also.
mm-hmm.
Hey, are you planning to buy a vehicle? Are you planning to buy a property? Or do you want to get another property? Do you want an investment property? I work with a lot of real estate agents and loan officers, so I'm always, asking these future questions too, because it's really important, especially even if they're not like, a business client and they don't, plan to have a business, whatever. I still ask these questions because it's very important that you understand their situation and you can help your clients that much more and save that much more money and save them a headache, and 6, 8 months down the line. If your tax person is not asking you questions about your future, you should probably think about another tax person. That's for sure.
Yeah.
That's for sure.
Yeah, I have to be actually thinking of
More
that too. You
proactive.
have to you have to tell them what you're up to, what's your goal. Usually this should be on the questionnaire, or like if you have one-on-one.
Mm-hmm.
And you should, and also you don't come like on April, you want them to ask that. So you have to be in advance. Come in advance.
Right. And tax people, they got to be a little bit more proactive too. And I
Yeah.
even then, like I still give a lot of my clients suggestions and things like that, and let them know there's like opportunity.
Yeah.
And that's a big mistake for people not asking their tax person questions, and it's a bigger disservice for the tax professionals not to ask them questions. Like you just don't want to have like a revolving door and just, hey, here's my paperwork, okay, I'll see you later.
Yeah.
Here's my bill.
Yeah, it's more than just like doing your compliance work. You really want to save money. You really want to get what's there for you, not just like, okay, we did it, now pay $5,000. I had like few actually clients, like when I first started, they were doing their taxes somewhere else or on their own. And when I look at their taxes, and actually this is why we ask for a prior year tax return, because what happens is like, okay, you see, okay, why did you pay that much? You should actually get that much, not pay that much. So I had to do a lot of amendment for some people, like because they were either do it on their own or using tax professional who just wanna like turn to the next client, return to the next.
Right.
Yeah.
Another common mistake that I see people do too is, and I get this a lot, I'm sure you do too on the off season. I'll get people that won't file their taxes for like years. Like I can't tell you, like I've been doing this for 15 years. I can't tell you how many times I've done people's tax returns where I have to do 2, 3, 4, 5 years in a row.
Yeah.
And it's just crazy to me because I'll tell them like, dude, like it's probably not even that bad. Like they just have this assumption that it's just like it's horrible, like they're gonna have a big huge bill, and some do, but majority of the people, like they set themselves up for failure doing that because they end up paying interest, penalties. But a lot of times too, like they'll get some of them even get a refund, right? Just because they either probably got some bad advice or the fear of the unknown, right? And now if you don't claim any type of refund, I believe it's after like 3 years, you lose it, right? And I think I just did one not that long ago. I think I went like 5 years, and out of the 5 years, I think they maybe owed 1 or 2 years, and he was just like super thankful. But I think people make that huge mistake too. Like best thing to do is just always file your taxes. If you owe, a professional is going to try to help you lower your tax bill as much as you can, and then you can just do the payment arrangements and like that, because this is the only entity that will go and take your money. You can get away from collections. You can file bankruptcy. The IRS in the state, you're not dodging that. So just like you're not dodging it. It's just not going to happen. And there's nothing worse when you have someone that gives you a call and says, "Hey, they just called my human resources. they're going to be taking a certain percentage out of my paycheck every week. Now, if you have a family and you have a wife, and then you have your colleagues, that's embarrassing, right? Or they'll go and they'll whack your bank account. They'll levy it, right? And that's even worse because you don't get that back. And all could have been prevented. Just bring your paperwork in, we'll file your tax return, and we'll put you a payment plan. But once that money's gone out of your account, it's very hard, or you don't get that back.
Yeah.
And that's like a gut punch. That sucks. It sucks.
Actually, I got like a few clients who have like back taxes, and because it passed like 3 years mark, they actually would have gotten a return, but they didn't. They lost that return just because it's past 3 years. And,
right. They changed that. It sucks. If you owe them money, you have to give them money. But if they owe you money, there's a certain time period for it, and you don't get interest either. So, which sucks. But that's a huge mistake, and I've seen that year in and year out. But you want to know makes it worse? Filing your business taxes late, right? I call it a stupid business owner tax. So let's say you have an 1120S, right? And you just want to be, think that you just don't have to file it, right? You just, one year pass, another year pass. Well, if you don't file your 1120S or your 1120 whatever, and it goes a whole calendar year of being late, just the stupid tax, which is the penalties and interest, is close to $2,700.
Yeah.
And then the state is probably going to charge you about close to $2,000. You're better off hiring a bookkeeper, paying your tax person in advance, than paying the stupid fees. Now you have to pay the stupid fees, but now it's time to do your taxes, right? And whatever it is you owe on that. So I just think that when people get the wrong information and they think they can go open up multiple LLCs and have all these different entities and then think like, oh, if I don't pay the taxes, it just goes away. Like, no, it doesn't. Like, you pay what's called the stupid business tax. Yeah, I've done that once, so I know, right? Like, long time ago. But that's another common mistake. If you're gonna go open up all those entities, LLCs, you're gonna open up the S and C corps, like, file your taxes, file them, because you're gonna pay the stupid tax.
Yes.
And be late.
Yeah, I like that. Stupid tax.
It's a stupid tax. I mean, come on, man. You got to pay the cost to be the boss, right? So if you're going to go start a corporation, a business, there's some costs that come to it. You're going to have a bigger fee with filing your tax returns. You're going to have some maintenance fees. You're going to have state fees. So if you want to be the boss, you got to pay the costs. If not, then you got to just be normal.
Yes, that's a really great tip to end with it. We can talk forever, actually.
Right, for sure, for taxes, for sure.
Thanks so much. But we have like appointments and other clients to talk to, and maybe we can do this again together.
Well, yeah.
And awesome.
Definitely.
Well, thank you so much, Alex.
Thank you
everyone who was watching. Oh yeah, thank you. And I'll talk to you soon. Bye, guys. We will save that. We will save this so you guys can see
for
it.
sure. All right, Nora.
Bye.